And good morning and welcome to the VSA Capital 5-Minute Morning Miner. It's Wednesday, the 17th of August. It's hump day. We're halfway through the week. Good morning, Paul.
And good morning. Do you think it's going to rain today we did get a bit yesterday?
We do like to have a little chat on the weather, don't we, at the beginning of this? Yeah, I think it'll rain this afternoon, unfortunately. I suspect it'll be a wet ride home. I don't mind a wet ride home as much as a wet ride in the morning. But there you go. Of course, the weather is that's just the UK. We've got listeners all around the world. It has, of course, been incredibly wet in Queensland, which has made mining quite difficult there, particularly drilling for new exploration. Everything's got stopped down there. So it all depends where you are in the world, what the weather's like. So we mustn't just think of Blighty. Talking of which, just to remind people that the Shanghai Mining Club, which we often talk about on this podcast, we are, in fact, this year doing an international mining marathon on Tuesday, October the 18th. It will start at 3 a.m. UK, which is 7 p.m. Vancouver, 10 a.m. Beijing. And it will run for 12 hours to 3 p.m. UK. And we will go Vancouver, Sydney, Perth, UK or Africa, and end up in Toronto. So anybody who wants to get the light touch VSA research, we say, and mentioned regularly on this podcast, and to join in our conference, which is simultaneously translated into Chinese. We also put out marketing material with every company's information in it. We record the conference, so we then send out individual recordings to our entire database. It is the cheapest way to get the widest reach of investors, far better than most of the conferences that most of the mining companies go along to, which are very expensive, and you end up actually just meeting people like ourselves most of the time, not real investors. Anyway, we also do it in association with Mining in Dubba. So if you're interested, let us know. On that note, let's talk about a Shanghai Mining Club member, which we've talked about quite a lot, and which is doing really well. Benchmark Metals released a very robust PEA yesterday, didn't they, Paul?
Yes, they sure have. Benchmark Metals TSX listed, exploring the Lawyers property in northern BC. PEA results now released show pre-tax NPV 921 million Canadian and an IRR of 30%. Post-tax IRR 23.5% with a 2.7-year payback, and a CapEx cost coming in shy or below 500 million at this point for 165,000 or 69,000 ounces of annual gold production. Estimated head grade would be right at 1.5 grams, and the recovery otherwise very nice at 92%. All-in sustaining costs right down there where they belong at about 824 an ounce. Now, I would point out a couple of things I noticed from the release here too, or that to remind investors is these deposits that they have are still growing in size. They are still finding new mineralization, open pit style mineralization. I would also suspect here that as they go into the pre-feasibility and feasibility drilling studies and so forth, they will be looking to push this NPV well above $1 billion, because that's what bankers want to see when they go to development finance. And also it's what tier one miners want to see, if they can expand the annual gold production probability still further to 250,000 ounces or so. So look for more and better still from Benchmark, I think, is the best way to put it.
Quality company. Love them. Right, let's move back to the UK a second. Gem Diamonds. Now, I think there's quite a lot in the interim trading update, but I would just point out that they have said that full year cost guidance isn't looking too good, basically because of the Russian invasion of Ukraine. And it's all going to result in a significant reduction of capex and, I suspect, profits. So a bit of a warning there. But what's your take, Paul, on the interim trading update?
Yes, that is a concerning element there because of those issues around the diamond sector, because Russia and Alros play such a significant role in the global diamond sector here. Gem Diamonds, however, producing out of Lesotho, and their production revenue came in on the first half at $99 million US, which is just slightly higher than what it was in the last half of 2021. Average price received also very close to the last half at $1,745 per carat. Recovered 3 diamonds greater than 100 carats from the mine, which were sold in the first tender for after the period end for 13.9 million. So those will be in the next to halves figures here. Recovered also carats were only slightly down from last year's half at 55,000 carats. Cash position 24 million here at this stage, and the dividend declared at 2.7 US cents. So otherwise, they are doing relatively steady state production here. It's those operating costs on such a low-grade mine that the mine represents that really become an issue. Things like the diesel costs and things like that. So have to be careful on this one. On the financial numbers side.
Yeah, I think you do have to be a little bit careful. But we know you love a diamond as a Paul Rankin best friend, as well as a lady's best friend, girl's best friend, whatever it is. Okay. What else you got to talk about, Paul?
That fresh on the bank of the Condor statement that put out yesterday, they put out a new resource statement. Condor Gold, the AIM quoted Nicaragua gold mine developer. This essentially the resource statement upon which the final pit and plant designs are being completed for the feasibility study. As we predicted yesterday, that open pit grade is going to be should be quite good here in the 2.5 to 3 grams range from what they're showing in the indicated resources. It's the indicated which ends up being part of the feasibility studies. The inferred essentially not counted as part of feasibility numbers, but essentially becomes part of future mine life. And we're looking at there about 8.5 million tons in the La India pit, 3 grams for 827,000 ounces indicated. So it definitely, because La India is just one of several known deposits on the property, many of those other satellite deposits are not nearly drilled enough at all. So nice place to start here in order to get up and running with this kind of grade and tonnage mineralization.
Now, one listener yesterday was questioning my relationship with Jim Mellon, and were we the same age? Jim actually is a little bit older than me, but the connection is, of course, we both went to Oriel College. Jim was actually there, I think, 4 years before me. I don't think he did as much rowing as I did, though. Anyway, moving swiftly on. People don't know about that, really. What else you got, Paul?
I thought I would mention here this outfit, TSX listed Cote d'Ivoire gold explorer Awali Resources, and people might recognize the name of the head of Awali, which is the former head of Mariana Resources. That's Glenn Parsons. And Awali is in a joint venture where Newmont is funding their exploration now on their ODN project there in Cote d'Ivoire, which has several drilled occurrences now of gold and copper gold mineralization. But this statement out specifically saying that both Newmont and Awali now believe that the style of mineralization on this property is iron oxide copper gold style, and that has some significant implications because most of those style deposits in these kinds of terrains are down in South America, whereas there's not very many of them yet recognized in West Africa, where this deposit or these deposits lie. So the other thing about iron oxide copper gold is they end up having very, very large gold and copper endowments when you find the right ones. Otherwise, I can't see why Newmont would be in on this property in the first place unless they thought there was some really significant volumes to be potentially discovered here.
Very good. All right, let's call it a day there, Paul, and we will speak again tomorrow.
Very good. We'll see you then.